Hey, Quants, I hope everyone had a good Christmas or holiday, however you celebrate. I'm finally getting back. I wanted to try and get in and make some videos, but, just spending time with family and didn't really get a chance to get away from the computer, which is not something I generally complain about because I frequently spend a lot of time, maybe too much time on my computer. So we're going to go over, first of all, there's a video coming out that I had intended to send out well before the holidays. So if you see that video, it's just like me playing Destiny. We don't, the Friday thing that I'd planned to do. Today is not the day that I would generally want to put that out, but I figured it's a Saturday, it's close enough. But the commentary in there is going to be a little bit awkward, likely because it's going to be after Christmas. So if you watch that and you watch this, well, I didn't go in and try to edit that previous video, but that's what that was about. I came back to make some videos and I realized that I never clicked the publish button on that one. And I figured, since I went ahead and put in the effort to make the video, not that it was a ton of effort just to record while I was playing a game, I figured I'd still go ahead and just publish it anyways. So real quick, we're going to go over Bitcoin and then I'm going to jump into something other than Bitcoin just because Bitcoin has not been that interesting. You've probably heard people talking about the expiration of options and that towards the end of the year, and that potentially being a catalyst for some upside to Bitcoin. So really, there's not much I can say here. The oscillators have likely or have looked like they've kind of continued to stay relatively high from the previous drop that we had in the 21st of November here or around there about. And so we did get a bias signal on the stochastic, which is just going to happen when we have the stochastic cross with the stochastic that I use, which is, again, from a mentor that I had who I don't think he's around anymore unless he's just hiding around in channels somewhere. He's somebody that I was basically following for a while and joined his Discord. And I've mentioned this before when I went over the master strategy and where I kind of was first introduced to these ideas. Hung out there for maybe a couple years. It was definitely over a year, but a couple years. And then he wasn't getting the growth that he wanted from the social channel efforts that he was putting in, so he just bailed. And I think he's doing his own thing now, just continuing to make money in the markets, which was unfortunate because I really enjoyed learning from him. His style meshed well with the kind of my psychology of the markets. And so anyways, with all that said, if you can zoom in on my screen here and kind of see these indicators. Some of them, actually, these exact ones you won't be able to get because he had kept these private for people who join the Discord. But you can find ones that are almost the exact same as these. Anytime he made an iteration, he just released the old ones as free. So I believe under the same name. So if you're interested in that, you can go find those. I haven't tried to reverse engineer these to see how, if I could come up with my own. Maybe that's something I would do at some point. But, not doing that just yet. So Bitcoin looking fairly boring, just waiting to see something come out here. The one thing I guess I will dig into is the seasonals. I don't think I had a chance to go over that last time. And so I've mentioned this before, I don't really like looking at this line chart, although it can be interesting just from a trend perspective. I think it can be more useful to just look at these, the table here. And the reason I'm looking at that is because I like to just see the year-end pattern here and how that's holding up, right? And so I kind of mentioned maybe we'll end up with a flat year. It's looking a lot less flat and a lot more negative as we get closer to the end of the year. So negative 6% is, not a great end to the year for Bitcoin when we're expecting a bullish end of the year. For people calling the potential of the shortening cycle or the end of the cycle in October, those guys all won so far. And what we have yet to play out is to see if in Q1 or Q2 we'll get some crazy bull runs. That would be amazing to see. I'm sure I mentioned at some point I'll probably stop saying this, but I don't know who's coming into my channel new. Since it is a relatively young channel, I'm sure pretty much everyone that shows up. So I'll probably continue to repeat this over and over again for a while, but I tend to be long biased. And as a result, of course, I would like to see price go up. And so But in the context of the 4-year cycle, what we'd expect is we'd expect that to just be a short-term move and not essentially putting in a lower high and not expecting a blow off top there, or something like what happened in 2021 where we had that high, we dropped almost 50%, and then we saw another all-time high, albeit a very small all-time high relative to what the previous one was. So we'll see how things play out there. All that said, it looks like we're looking more negative than flat for the year, but I don't know. Some people could argue that 6% for Bitcoin is relatively flat considering all the volatility. So the next thing that I wanted to jump into is I kind of wanted to take a look at, since everyone's talking about gold and silver, thought it might be kind of fun to dive into some gold and silver here. And so I just want to make sure I get to the tweet that I was interested in looking at. So credit to this guy here. He's if you're familiar with Chads, he actually, Eric Crown has interviewed him on his channel, and then also Bob Lucas, who was, from my perspective, the first person I heard talking about the 4-year cycle and that. And so they actually do a trading kind of group together. This guy is one of the guys that's in there. Peter Grant. I'm gonna get his name wrong. I'm drawing a blank on his name, so I'm not gonna sit here and try to think of it right now. But he's a chartist, and so this is another guy that's in that group. I don't really see many people. I follow him on Twitter, but I don't know, or X. I don't know a lot of other people mentioning his name, and so I don't know. It looks like he has a few followers, but he's a chartist by trade. And so he was kind of putting out this idea that if you, and this was an indicator, you can find this indicator in TradingView, and he was mentioning just like throwing in a stop loss or using some kind of an ATR for a trailing stop loss. If you are following silver, considering the parabolic move that silver has undergone so far. And so I just want to take a look at the silver chart myself and kind of see where things are. So this is the one that I'm using, is the SIVR chart. And so if we zoom out a little bit, you can just see, we were flat since price. You saw this increase in price back in 2020. And so I think, I'm trying to remember when I come back here and there was like COVID times. This is 2019, is that right? 2019 or 2020. So yeah, somewhere around here or here. I'd have to look. Funny, you can't even remember that, or I can't even remember exactly the dates on those now. But anyways, we still kind of set sideways for a couple of years, few years actually, almost 5 years, before we finally started to see this kind of crazy parabolic move. And man, this is ridiculous. So from a price perspective, I don't think it's that crazy. I mean, for like a commodity, 129% is pretty crazy. But, if you're familiar with crypto markets, this, is not that crazy of a move. But how do we capture this trend? I went ahead and threw his settings on here to see where things would line up. So right now, what I would like to first point out is this is actually lining up fairly well with what I would expect to see with a GAN system. And so I've mentioned before, I kind of like GAN. I've applied it to the master strategy that I have that I'm going to go, I've just put it on. I'm going to take it off just for a minute now and only stick to some GAN stuff. So if you're following GAN, what you would do is you'd be trailing your stops at these swing bottoms here. And you kind of see that these tend to line up pretty closely here. The one that I would point out here is in the context of GAN. Once things start going parabolic, you might not get that swing bottom, or a swing bottom that's relatively close to where price is. And so at that point, when things are just going so parabolic, what you likely want to do is just start trailing your stop very close to the bottom of the previous candle. And that way you're not eating a 20 or 30% loss on the all-time high of the position, because when price goes parabolic and it turns around, it can turn around very quickly. If you've been in markets for any amount of time, I'm sure you've seen that. So just to come down to the current stop loss where this ATR would have you, you would be giving up 6%. Considering the total that we just looked at was about 129%, just call it 130 just for round numbers here. So we're at about 130%. You're giving up 6% of that, or 6.5% of that if you're using this trailing stop. And that kind of closely aligns with what you might do if you're following a Gann system, where you just set it at the low of this candle or just a few percent below this candle, and which is basically going to put you right at that 6.5%, depending on how much of a variance you give yourself between there. So I thought that was interesting, kind of an interesting way to look at it. And so I like the alignment here. If you're in gold or silver, one thing that I personally have taken away from a lot of the books that I read, in particular, if you've read any of the Market Wizards books or the series of those books, a lot of the people that are interviewed in those books will comment on the idea that, you know, you need to believe, or just the concept that things can do unbelievable things. And so that means to the upside, you know, you don't want to you don't necessarily, if you're doing trend following systems, you don't necessarily always want to limit your potential gains. Now, with that said, that doesn't mean that you have to like give all of your portfolio to that particular trade. There's some arguments against like whether you want to diversify against assets or that, but I'm just saying in a particular trade, you could potentially just pull some off the top. I personally like the idea of this. As I mentioned, I'm long biased. I'm still working on my own personal, from my own personal growth, learning it, trying to get better at selling, because that is not something I'm very good at. I tend to be pretty good at picking entries and not picking exits or staying in a position too long, even though in a big trend that still works out favorably. There's optimization for myself to be made by, you know, selling out a little sooner, or what I wanted to kind of touch on is maybe just taking some off of the trade. And so in this particular context, since we're already up about 130%, if price were to drop down here and you took off 50%, you could take off less, of course. I mean, this is just an example that I'm providing here. If you took off 50% of that, you basically take all of your capital out of the market, and then you're just letting the market's capital stay in play. And so that may be something that other people, you know, that might be an interesting way to play it. It's a way that I'm considering playing these kind of markets, is just being better at locking in my gains by taking out the initial capital. I've heard a lot of people talk about that. You know, I've had my own psychological games with that, where I feel like if I do that, I'm not getting enough out of the market if it doesn't go in my direction long enough. But again, going back to some of those books, and to be fair, a lot of the books that I've read, and I mean, you'll see this in a lot of different books, the idea that it's a slow game, right? You're running a marathon here. We're not trying to sprint and get rich quick. And so with that said, the preservation of capital is paramount. And so if you can get your capital out of the market and just let whatever's remaining ride, whether you win or lose on that, you're not losing any of your capital. Now, of course, this all is precluded by the idea that you've got a good entry and you're going to get some gains, and you're not just taking losses immediately after you enter the market, right? So assuming you're getting reasonable entries and getting some percentage gain on the market, locking in those gains by ensuring that you don't give up any of your capital. And if you're giving up capital, it's going to be capital that was made by the market based on the gains anyways. So just wanted to throw that out there. I think, yeah, so with that said, I thought this was a pretty viable way to handle this. It aligns well with the Gann strategy. The thing that I actually kind of like about this versus just strictly following Gann, there is a nuance to that if you're following Gann, which is going to be, well, now once it gets to a certain level of parabolicness, and who dictates what that level is, when do you start trailing that? Nobody really knows, and so that's why I say it's a little bit nuanced. If you're strictly following Gann and you're following a 1 bar indicator, and so that's one thing I personally, if I wasn't going to trail closer to the market, because I wouldn't want to wait until the price comes all the way back down to the 2 bar swing, which is something I use heavily. If I wouldn't want to give up all this gain to to wait to see if the price come back here before I start taking something out of the market if I saw this much appreciation, right? And so with that said, you could add in the 1 bar swing, and then if I were doing that, then you're getting out at 61, which is not terrible, but considering the gain that has occurred. But, you know, if you're going all the way down there, you're giving up, you know, almost 20%, which is significant, right? And so that just goes to my point about how I was starting this off. How much do you want to give up? Starting to trail at the bottom of these candles might not be a bad idea. It looks like on the daily time frame, there's a lot of potential gap fills that could occur, right? So there's a gap here, there's a gap here. It looks like this one looks like it. I mean, maybe not quite filled. So, you know, if you want to call that a gap, I mean, you can come all the way back here. Looks like this one was probably filled. I mean, I'd say that one's close enough. So all that said, I mean, if you're going to end up like talking about, oh, these gaps have to get filled, and of course, who knows when that's going to happen. But if it came all the way down here, you're again starting to give up a fairly significant percentage, almost 20% to get back through these potential gap fills, right? And so, you know, a more conservative way to play it to ensure that you're walking away with some profit is to maybe just set some stop losses here. And then when you get out or get a portion of that out, if that money is strictly dictated for commodity trading or a silver position trade, then you maybe want to buy back in after price kind of corrects a little bit. Now, by doing that, as I was just mentioning, with some of the other interviews that you would hear if you read those Market Wizard books, is that price can go farther than you think it can. Same way it can go down further than you think you can, right? Which is kind of the idea of like, make sure you take your losses quickly, so you're not just like taking those diggers all the time. It is possible that we see price just continuing chugging along here for quite a while before it corrects, and then maybe it comes back down here after such like a much longer gain, and that could happen after, you know, maybe it gets you out and then it runs on. And so this is all just the game of trading, right? And so with that said, I think that is all that I'm going to put out today. I just wanted to share this. I thought it was an interesting way to look at the market. I think ATR, like I've heard a lot of people speak about ATRs. I personally have not found very many good implementations of ATRs that play out statistically in the context of algorithmic trading, and so they generally haven't tested well. But I do know some algorithmic traders that have used them and say that they're good. So I just personally haven't found those settings myself, and I found other settings that tend to play out better. All that said, I just thought this was an interesting idea to kind of come out here and share. And then just the last thing that I'll look on is I want to go ahead and just throw on the master strategy here and just kind of take a real quick look here. So back for a while there, we were kind of just trending. And so as I mentioned before, this is one of the problems with the trend trading strategies, or most of them, is that in these sideways markets, you're really going to get chopped up, right? So you kind of need to have a way to know I'm not getting in yet, or you're just going to assume that you're going to basically take losses through these times in the market. And so then once the market finally takes off, we have this 821 cross, or this is the 921 cross, and then it comes down here and bounces off of the 200s, does it again, and then we just ultimately get lift off. And so this is kind of crazy town right now for silver. And so obviously I expect this to end at some point, but I wouldn't want to be trying to guess when that's going to happen. Anybody who's going to try shorting this, somebody might eventually be right, but that's a good way to probably blow up your account. So that'll be it for today, and we will see you on the next one. Peace, quants.